Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders to the COT data. So essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment, the market is testing a quite strong historical support and demand area. From here, multiple rejections to the upside have been created. And what we can see right now is that the market just tested exactly this same area, has already started rejecting it to the upside. So in a situation like this, we could expect more potential bullish continuation to be created away from this zone. So the monthly time frame seems quite bullish. Now, if we drop down the weekly time frame, what we can notice is that we did see just now a break of structure. In fact, this zone was a quite important level of previous weekly support that was then broken to the downside, and previous support, once it is broken to the downside, becomes resistance, and the market respected it as resistance here. Then we just had the break back above the level, and previous resistance, once it is broken to the upside, is supposed to be turned support. So in a situation like this, the next logical step would be to see a test of the support and then a potential rejection to the upside away from this area. We can also notice that as we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And what we can see here is that we have the 0.32 Fibonacci retracement lining up perfectly with this previous level of weekly support and demand. So what we could expect is a retest of this support and demand area, and then to see a potential rejection to the upside away from this zone. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, I did speak about NZDUSD just a few days ago. After this impulse, I explained all the reasons for which we could expect first this correction, and then from here, the creation of this push to the upside, which is in fact exactly what the market did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. However, in a situation like this, we must identify the new structure that the market has been creating. And the first very important level to identify is this one here, which is this level of previous daily support that was turned then support resistance here, respected as resistance here and here, and now the market has broken it once again to the upside. So this previous support that was turned resistance in these two occasions is now broken to the upside, therefore acting once again as support. And we could expect a test of the level and then a potential rejection to the upside. Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and let's check the data precisely for the NZD. Now, what we can see here is that with the last reports, institutions have been increasing their net positions from minus 13.5k to minus 11.2k net positions. So institutions have been moving back to the bullish side for NZDUSD, making it stronger. Now, why do I say NZDUSD? Because every currency on the spot is traded against the USD. So if you're looking at the data for the NZD, already you're looking at NZDUSD. Now, keeping that in mind and moving back to the chart, what do we have? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, here on the daily, this area is actually very strong confluence of support, because Since we have an impulse and the start of a correction, if we want to measure the correction after the impulse, we have to identify how we have the 0.32, 50%, and 0.618 Fibonacci retracements taken from the low to the high of the impulse leg, lining up precisely with this previous level of horizontal support that we have already identified. Now, this means that we actually have confluence of support in this area because we have both the Fibonacci levels and the horizontal support both lining up in the same area of price. And inside of a confluence of support zone, you would expect to see institutional longing. And in that case, you would have an even increased probability of a potential rejection to the upside away from the area. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.